big headline here with that downgrade. But when you look at the stocks, the KB and the KRE, still positive on the week. Chart shows a big decline, but still positive. What is this announcement about this downgrade? What does it mean for financials going forward?
Well, I think what it tells us, and the market reaction yesterday tells us, that these mid-sized and small banks continue to be on shaky footing, at least in the eyes of investors. And it's a realistic fear because we continue to be in an inflationary environment, right? The Fed has continued to hike after slowing in June for a moment there. And, the cost of capital is rising. And there are a lot of concerns about whether these banks are prepared to weather a recessionary situation or a continued inflationary situation. They also have exposure in areas like commercial real estate that have continued to be a little bit troubled. And I think people are not ready to breathe a sigh of relief quite yet. So I think this was just an excuse for investors to sort of project some of their anxieties about the regional banks and some of the other more troubled lenders onto the stock market.
Yeah, so you mentioned the regional banks, and certainly there's a lot of anxiety about them, concerns about deposits moving, just competition from the bigger banks. But there's also that warning about the bigger banks that are generally seen to be pretty solvent. So why did we see that sell-off in the bigger banks?
Well, I think there are other matters affecting the bigger banks that need to be considered. For example, in late July, the Fed's Vice Chair of Supervision, Michael Barr, announced that he was planning to tighten up the capital requirements on banks. This, of course, would affect the smaller and mid-sized banks as well, because one thing he wanted to do was raise the threshold of the need to have tighter capital requirements from $100 billion in assets to 100 billion in assets from 700, right? So you're capturing a wider swath of banks there. But the larger banks are still also going to face continued and possibly tightened capital requirements. And there is concern that they may be exposed to continuing headwinds in the economy. We kind of don't know what's going to happen in Washington, although it seems like the energy toward true and significant banking reform on Capitol Hill has kind of fizzled since the failure of Silicon Valley Bank and the banking tumult of months ago.
I want to touch on the Italy news. Italy obviously backtracking on the extent of the windfall tax, but windfall taxes are nothing new in Europe. This headline, does it have any real impact on the U.S. financial system?
I think it's something that the more progressive type reformists like an Elizabeth Warren may look at with interest, but it probably has no political chance here in Washington. I just don't see us levying a European style profit tax on our large banks in the United States. I don't think there's appetite in the White House, which wants to just see the economy slow and steady and is focused on other issues at the moment. And I don't think we have sort of standard bearers in Congress who have the political support to get something done. You've got a Republican Congress, obviously, and you've got a Democratic-dominated Senate, but I just think they have other priorities on the agenda this year. So I don't think we'll see that. But it is a reminder of how government can step in and tighten the grip on banks when the need seems to present itself. Okay. And that need arises when you have bank failures, depositors losing their shirts potentially, and market leeriness. So it's something to watch, but I think it's early innings before any major reform.